So, Florian, here we are.
Hi, Sabine. How are you doing?
I'm good. I'm going to actually bring some of the slides I produced for our session, Florian. So I'm so really thrilled and excited to have you here with us. So today we are having a one-to-one chat with Florian Graillot, partner, co-founder, Astoria Ventures or VC. So very excited to have you here, Florian, and actually discussing some of the trends coming to us in 2021. Welcome.
Thanks a lot for having me and looking forward to this discussion on, let's say, closing up this 2020 year and obviously discussing what we could expect for next year.
Thank you. And one thing which happened this morning whilst I was looking at my LinkedIn and Twitter feed, and Jennifer was saying to me, she was actually highlighting that we're actually spending a lot of time on 2021. What about 2020? And so I thought we could actually make sure we have a little bit of retrospective as well on 2020 as we discussed together.
Yeah. Makes sense.
Let's introduce Florian. Florian is very well known in our sector, which is InsurTech. Florian is a co-founder and partner at Astoria VC, which is an early stage venture capitalist fund. And I remember in 2017 when Florian decided to go and design his own view as to how to invest in InsurTech. We talked then, actually, toward the end of 2017, early 2018. But I think it's amazing because not many people know your background, that you have been an investor at Alchemy, you have been an investor at a new fund. I know you from your AXA venture fund because I was a startup bootcamp and it was looking at my deal flow. Yeah. And now in Astoria. So thank you for giving some of your time today.
Thanks a lot again for having me. And I think that it's a perfect combination of investment background and obviously a bit of insurance. But I think that the key point is that I've been running and navigating the European InsurTech scene for around 6 years now. So I think that there is a lot to learn from this kind of track record of being on that industry. And I think that part of the discussion we will have today will be based on this background. So that's why I kind of disclaim it at the beginning of the discussion.
Thank you. And you're a great writer. I spent a lot of time reading your LinkedIn and Twitter, so that let's just be clear, I do rate. And I want to thank you because a lot of the learning I actually had this year on API and open banking or open insurance came from you. So thank you.
Cool. Thanks a lot. I think that this is part of our job, let's say, to be active on social network, to share content. So happy to know that people are reading this, and if it could be helpful, obviously that's kind of very important for us. And I think that the most important thing is to discuss this trend and obviously challenge our standpoints and our vision on what might happen next. So I'm pretty sure that this is what we will do in the next minutes.
Absolutely. So here is a plan. So my ask to you, Florian, is to look at the past, the present, and the future. And then we are going to conclude, right? It's very important we have some conclusion for our viewers. I want to ask you to look at what are your reflection on the past year. I would like you to give us your prediction for 2021. And then what we should be taking care of or paying attention to as well. So what will matter for the long term? Because strategies are not 1 year thing. In our startup world, they are not even 10-year things. They are 3 to 5 year things, and they have to be reviewed on a regular basis. So your conclusion, I think, will be very important for a lot of people out there, whether they are InsurTechs or incumbents who are trying to build those new strategies for the future. So thank you. And hopefully you're happy with my objectives for today.
Yeah, it makes perfect sense. I think that we can only predict the future when we have a look at what happened just previously. And obviously this year was a bit crazy and very specific. So I think that there is a lot to learn and a lot to expect in the near future, especially in our area, which is InsurTech or technology applied to insurance. So it makes perfect sense to have this kind of split during the discussion.
Perfect. So let's get started. So first, let's look at the past year. So as you know, I love numbers, and I know you love numbers too. So I actually put a bit of conclusion around where we are as of, I did it on 27th, so 2 days ago, where InsurTech is. And so I would love to hear your views of where we stand in our InsurTech world today.
Yeah, actually, that's quite interesting because there is a trend that we can see on your chart, which is that InsurTech has been growing for years. Obviously, 2020 is a bit specific here. And I would say that there might be three trends that are combining here to explain that the curve is flat or maybe a bit decreasing. If we just take the example of the European InsurTech scene, because we just wrap up the number this afternoon with my partner Jan. So it's a bit more than 600 million euros that were invested in European InsurTech startups compared to 800 million last year. So there is a 25% decrease. I think that's behind, and that's basically what we see on your chart for global investments. And that's what we expect, a decrease in the numbers. I think that there are three trends that combine. So the first one is that obviously startup didn't manage to raise money because of, let's say, too small figures, more challenge to access capital because during a few months, investors were not really active anymore. I mean, in making new deals as they were focusing a lot, especially at the beginning of the lockdown period in Europe, they were focusing a lot on their portfolio. Yeah. To make sure that it will overtake the crisis and the lockdown. So meaning that they spend 1 to 3, 4 months just taking care of the portfolio, meaning not making new deals. So that could explain one part. The second part of the explanation might be a startup that tried as much as possible to delay their fundraising. And that's what we saw as an investor. I mean, by the end of this year, we saw many startups that were very good coming back to the market. And if you have a look at, for instance, Loco or GetSafe that raised very big rounds, it was quite fast, but they came back to the market quite late in the year, meaning that they wait as much as possible for the market to become clean or clear enough to raise money. And the third trend, I think, is that a few startups have raised money and haven't announced it yet. So that's what we saw in the last months of 2020, a lot of PR announcing rounds, but I'm pretty sure that we will have new announcements in early next year. But obviously, the deals were closed a bit earlier. The best example of this delay between the fundraising and the announcement is, for instance, Plus Simple. I think that they closed the round in early, maybe I think it was in Q1 2020, and they announced it in Q3 2020, just waiting for a better period to get more visibility around the announcement. So I think that the three trends combine, but obviously the investment trend is, let's say, plateauing or decreasing a bit. That's what we saw on your chart, and that's what we saw in Europe as well.
And that is a trend which is happening across the globe. I mean, I was doing a little bit of review. As you know, I did my predictions as well, which I launched. I actually released on LinkedIn. And 95% of the investment went for big players, right? And so when you look at how the split of investment is going around the world, what's your view? Still the US. I mean, the numbers have changed. I used to have 55% coming from the US a while ago. So it's nice to actually see that we have gradually a more even split between the US, Europe, and Asia. But what's your views on the current situation as to where the money is coming from?
Yeah, I think it's quite interesting because, again, there might be a few trends that are combining behind the scene to explain these figures. I think one of them is the maturity of the European market, meaning that we see more and more startups raising huge rounds. For instance, you had over 2020 bought by many, that raised a bit more than 80 million euros. Alan raised 50 million euros. Luco raised 50 million euros as well. So you start to have big rounds. And late last year, it was WeFox that raised hundreds million euros, as you mentioned in the previous slide. So you see more and more startups that in the InsurTech space start raising more money in Europe. So I think that it might explain why Europe is becoming a bigger hub, which makes sense, by the way, because in terms of European insurance industry, this is a big market. You have worldwide players like AXA or Allianz, for instance, that are located in Europe. So it makes sense that in the InsurTech scene as well, you start having big players. In Asia, that's quite obvious because we see a lot of tech companies trying to enter the insurance market, so applying technology to the insurance industry. And in the US, I would say it's quite regular, though there is much more volatility in the US market when it comes to investment. So I would not be surprised that next year would be more active, for instance, whereas maybe the impact of the lockdown was a bit higher for the US market this year. But on the other hand, and I think that we will come back to this topic later, but around IPO, the US market was very active this year. Whereas no IPO in the InsurTech scene in Europe. So maybe in terms of investment, but if you have a look at all the value chain in terms and all the maturity chain in terms of investment, there might be a few difference here between how the market are structured behind the scene.
So you mentioned a few great companies, and as I was reviewing, and I've been reviewing those numbers for the past year, like you do as well, Florian. So I just thought, you mentioned already a few names. So I just wanted to describe your view around our top five, right? Those are the top five in a number of markets. And I know that Europe is your market, so you are going to spend more time on that. So what's your lens on those unicorns? Should we have more unicorns in Europe? Why are we not investing more in Europe as well? I think it's a big question for a lot of InsurTechs, which are going to look at this webinar.
Yeah, I think that the difference between the size or the valuations of the startup is based on the size of the market itself. Obviously, in the US, you can consider it as one market or, let's say, a very local market, but overall, it's the same language. Overall, you have the same rules that apply. Overall, culturally speaking, it's exactly the same. And in terms of tech adoption, I would say that the US are more tech savvy than in Europe. So I think that this is the first difference that could explain the difference in valuation. And the second point is the activity in terms of VC investment, because if you have a look at the VC industry as a whole, you will see exactly the same kind of delay or difference between total investment in the US in startup overall and startup in Europe. Then you can see in the InsurTech only space between InsurTech based in the US and InsurTech based in Europe. So I think that here it's based on how different the market are in terms of investment in startups. And the last point, which is related to the second one, is in terms of exits. In the US, I think that you have plenty options to exit your company. We see Lemonade, for instance, that went IPO, Root as well. Oscar Health has filed for an IPO very soon. You mentioned Metromile as well, that could be listed very soon. So you have a trend here. There is an opportunity here to get an exit for investor. That's the first point. The second point is that corporates in the US are buying out a lot of technologies. That's a very different, very important difference. And the last point is the tech activity. So here, corporate, but in the tech side, let's say Google, Facebook, Amazon, and so on, these guys are acquiring either technologies or teams, and they are purchasing a lot of companies. So I think that this M&A trend at the end of the growth journey might explain the difference of in terms of investment at the very beginning of the growth journey. So I think it's something that we should push in Europe to have corporates, let's say, maybe acquire more or be more active in terms of M&A.
I have to ask a question. There is only one word, which is coming out from this slide, which is decacorn. We only have pretty much one decacorn technically in InsurTech, and I know it's Grab, so it's just doing so many things, including banking and insurance. Do you think we could find decacorns in insurance or InsurTech?
I think it's a huge market. If you take just the European insurance market, it's 1,300 billion euros of premium per year. So obviously the market is big enough to have decacorn players on the ground. Then it's a matter of time. You cannot become a $10 billion worth company in a few years. So you need to grow, you need to raise money, you need to acquire and attract customers, you need to generate money, and then maybe you can become so big. But obviously the market itself is big enough to have this kind of players. So now let's try to find these kind of players. And I think that one discussion on the European market is that most of the players that you have there are active on their domestic market.
Yes.
So one challenge, I think, for the next years will be how these players are able to scale outside of the domestic market, which is a requirement to reach these kind of huge valuations.
Absolutely. I mean, one point I want to highlight is, Europe is massive and you have a lot of InsurTech between Germany, France, Italy. Those are probably the biggest market in Europe, and for sure the UK. I know we are Brexiting, and so we don't know what that means from an InsurTech viewpoint right now. However, most of those organizations will have to look at how do they actually play in a number of markets. And I know Lemonade probably paused until they understood what Brexit looks like for them to enter the UK market. And so the only way that some organization will be able to scale is by looking at Europe as an entity than as a series of different countries, like the US afford or allow for a lot of players, even though they have to register in 50 states. So every state is technically different in different countries. So very similar challenges potentially facing a number of those players. Did you have to change your strategy this year, Florian, looking at our world and how things have changed very quickly earlier this year?
I think that what is interesting for us as an investor and as an InsurTech investor is that our investment thesis that we designed 3 years ago when kicking off Astor VC was investing in technology to build the next insurance generation. And I think that it's more relevant now than ever before, because I think that, or I mean that our investment thesis was that insurance company would need technology to be part of the next insurance generation that will combine obviously incumbents, but that will add new players that have nothing to do with insurance right now. I think that we will come back to platforms, for instance, but that's a huge topic that could be a huge part of the market. And that has always been our thesis. Obviously, that was a thesis, that was a goal. We saw a few startups, I would say, before 2020 that were helpful to move into that direction. But I think that now we are live in that new world, meaning that we can say whatever we want, but the world has changed. And I think that the major change is that insurance companies have realized that technology was not a plus, it was a requirement. Because I think that before 2020, it was a lot around technology against incumbents or against existing teams. Now and during the lockdown, unfortunately, we experienced that what was seen as a strength by corporates, meaning having a network of brick and mortar shops, obviously that was a strength for them, and it still might be a strength. But the truth is that when the world is locked, having brick and mortar shops doesn't help. No. You need to move online. You need to move to technology to keep working. And I think that this change was very obvious for incumbents and make our investment thesis more relevant than before, meaning that obviously we didn't change our investment thesis, but we accelerated because more and more we see corporates asking for this kind of technology. And I would say that in 2019, we discussed a lot about the augmented insurer, B2B technology, enterprise software for insurance employees. But it was a lot of discussion. It was even, I would say, a buzzword from incumbents. Right now, they are looking for this kind of technology. They want to have a clear ROI. They want to have a clear project to make it happen. And I would say corporates in this mood are looking for fewer solutions, but with very clear potential results. And this is where we are investing. We are investing in technologies, mainly, I would say, B2B enterprise software, useful for obviously insurance company, but for any player that would like to be active in the insurance space. So again, I see this period of time as an acceleration of our investment thesis and not a change, but much more validation. So if we can, let's say, be happy of something this year, is this our investment thesis? Again, is very relevant. And I think that we will see more and more startups into that direction, which is quite exciting as an investor because we will have more opportunity to invest.
And that is, it's key. And we are going to move to our next section. And the reason I think it's what you are saying it's key is when we look at the future and what we should pay attention. Should we just pay attention to Fintech, right? The big tech, whatever the big players might be. But some of the things you highlighted is augmented tech, right? You just mentioned augmented tech, being able to work remotely. And I think that was a big theme, which came from talking with and working with a lot of insurers this past year. You know, how do I do sales and marketing, Sabine? How do I do servicing? Or how do I do claims better? Because I didn't think these things would ever happen, and I need to digitize really. And, you know, when we were talking about digitization in 2019, it was sometimes nice to have, right? As you said, it was a theory vis-a-vis the practice. But this year we didn't have a choice. So going into the future and your thesis, you know, looking at some of the big guys, and I will actually move our phase a little bit, I think a little bit below if I can do that. But you see some big players and some guys who actually are decacorns or unicorns, and bought by many who's done very well, as you said, this year. What should be the trend? And we'll move to other players, which I want you to actually interact with and think about it, not only from a global viewpoint, but as well from a European viewpoint.
Yeah, I think that it's quite interesting. And I would say that beyond the three examples here, there are several trends that combine. The first one around Grab is indirect distribution. We call it right now embedded insurance. Because the purpose is, again, this has nothing to do with insurance. But obviously, as there are a lot of touch points and as insurance could be related to any kind of activity, any kind of, let's say, period of time in your life, obviously this kind of player, which has a lot of customers, millions of customers, which has a lot of data about these customers to better understand who they are, how they behave, what they want, what's their risk profile, which might be interesting for an insurance company. And the third point is that they have very regular touch points with their customer, which is basically the dream of any insurance company. So based on these three strengths, this kind of platform is very relevant to distribute insurance. And I would say it's close to the just-in-time insurance, the right product at the right time through the right channel. And in that direction, it's a good example of a platform that is adding insurance on top of its services to basically gain margins, because that's every time they sell a product, they get a fee, and it's just a layer or even a business model for them to make money by selling insurance. Whereas at the beginning, they have plenty of services that are free but monetized, for instance, through insurance. I would say this is the first trend. The second trend, where Hippo and the Bought by Many, I think, applied, is how the distribution, even in B2C, direct to consumer, is digitizing. And here, I think that there are two ways to see this trend. The first one is to have a look at these figures and say maybe it's small. I have in mind that Bought by Many announced 200,000 policies sold in the summer 2020. So 200,000, not that bad in terms of as an investor or as a seed investor. I find this KPI quite interesting. But if you have a look at very big players in the insurance space, they have dozens of millions of premiums sold. So obviously that's not the same scale. So either you see it as these players are very tiny and they will never, let's say, compete or cannibalize incumbents, option A. Option B, you consider that they are growing very fast and that these 200,000 plus policies sold were sold very quickly, and that obviously you will have here a player that is significant in a short period of time. And obviously, that's the second trend that I think is the right one. And a KPI that I usually share to explain why I believe that this is a strong trend is the ratio between e-commerce and the whole retail market. If you have a look at these figures, at the beginning of this year in the US, it was around 15%, 15% of the market. So e-commerce was only 15% of the whole retail market. So obviously 15% is not that huge, but if you apply that percentage to the size of the market, again, in Europe, it's 1,300 billion euros of premium per year, then you have a $1 billion market, meaning that even if it's 15% of the market that you can digitize through Hypo or Bought by Many, it might make very big companies at the end of the day. So maybe it's very small. And I think that it's small compared to huge players. The truth is that in the European market, you have a lot of small or medium-sized players that will be targeted by these players and that might, let's say, be cannibalized by these purely online distribution channels. So I think that that's something that will keep growing, obviously. And again, if you have a look at it in terms of percentage of the market, you can say you're comfortable and nothing will change. Yeah. If you have a look at this in terms of euros, it could be a huge opportunity.
Absolutely. In the 2 points you actually made, you talked about embedded insurance, embedded finance, which is a big topic right now. And what is happening is that what you realize is understanding your business model and how you are going to distribute and where insurance fit. The key thing we as insurers, we know is the regulation has gone through that before. And so whether it's allowed or not, we need to be really clear around whether embedded finance or embedded insurance will actually be accepted, because we have been, there's been many years of claim back, billions of claim back because of that specific problem. So we are going to see a lot of insurers saying, hey, you know what, I need to understand whether I'm not going to be targeted by the regulator by, selling something which is embedded. And there's regulations for that. The other point, I think, which is very important, is about any country that you made, which is, I've been talking to all my neighbors, and I say, if you need a cat insurance, you need to go for Port My Money. But the interesting thing is, after I said, okay, how's it going, guys? And they love the platform, they love the service, and they love the fact that their loved one, which is an animal, is being cared for. And so I would say the organizational scale very much, because they know very well how to take care of the customer, which in that case, the customer, maybe you and I, but actually it's the animal, which goes back to what customer centricity is, and what a lot of those players have done, where it's about really understanding the customer. Here I have a few others, right, which are focused more on the SME market, which has suffered massively this year. Yeah. And so I'd love to hear your commentary around, SME, gig economy worker, freelancers, what is this going to look like for us in the future?
Yeah, that's very interesting. And by the way, that's one part of our investment thesis, I would say, around what we call new risks. So obviously SMEs are not new risks, but you mentioned the gig economy, freelancers, and so on. More generally, what we call a new way of working, for instance, should have dedicated insurance product. There is a lot of thing around employee benefits, which is very important in corporates, but obviously when you are a freelancers, obviously there is no corporation to offer employee benefits. So how you could offer this kind of opportunity anyway for freelancer? I think that there is a huge opportunity here, and I think it's even more interesting for startups because corporates are not yet there. I mean that if you take for instance, in France, it's quite funny because insurance company name freelancers, so people on Malta or this kind of platform doing any kind of job on demand. They call them travailleurs non salariés, so let's say self-employed people, which could apply for a doctor, a lawyer, or something like that, but obviously their way of working is not the same when you are self-employed and when you are what we call a freelancer. And I think that as long as insurance company will put all these players that are very different under the same name or in the same basket, I think that there is a huge opportunity for InsurTech startups to address very specifically these needs. That's the first opportunity. The second opportunity is in terms of the market. In France, again, you have a bit more than 1 million freelancers, which is quite interesting and quite attractive to start with as an InsurTech player. But obviously, that's very small for an incumbent. So again, the market is too small to be attractive for incumbents, but that's way enough to start a company as an InsurTech startup. So that's a second argument, I think, to see more players in that space. What is quite interesting is that most of the players in that space around freelancer are based in the UK. We saw a few of them in Germany, a bit of them in France, but there is no success story yet. And in terms of SMEs, quite the same. I would say that the UK was ahead of the curve. I remember 2 years ago, we published a map around the 9 trends in InsurTech across Europe. And one trend was around SMEs. And funnily, there were only UK-based startups in that pool. So again, it was 2 years ago. Fortunately, now we have a few of them in Germany, in Italy, in Eastern Europe as well. And in France, we have a few players. But anyway, the UK is ahead of the curve. I think that we saw an SME targeted InsurTech that went bankrupt over the year in the UK. So that's the start of the let's say, or that's the normal journey for startup. It happens, but I think it says something, by the way, in terms of direct distribution, even when targeting SMEs, meaning that there is a question, I think, around the value proposition. And having a digital process might not be enough to attract customer, even if these customers are SMEs. So let's see what will happen. But I think that the value proposition here need to be fine-tuned to attract more customers.
Absolutely. Needs to be fine-tuned. And one thing you actually highlighted around, there's many segments and smaller segments. Some of the things we've seen was around digital nomad, for example, this past year. And, with Brexit, that means that we need to pay more attention of those people who want to work in the sun. And the proposition is not just that straightforward. It's not just about a laptop insurance, right? It's about lifestyle insurance. And that opens up a very interesting market potentially for those who want to go after it. Which takes me to, when we look at insurance, we don't often align to the way the big tech, right, are investing in technology. Any commentary you want to make around, the disparity? Because when I look at the numbers, and I think, AXA, Zurich, Allianz, Munich, Swiss Re are doing a great job to invest, acquire, and all those things. But still, it's not anywhere near the big tech. What's your view?
Yeah, I think that it's a cultural, I would say, mindset, because they grew almost from nothing. They are very big players and they grew very fast. So they know that they can be disrupted. I think that one challenge with insurance is that these players, insurance companies, believe that they will be there anyway in a century from now or something like that, meaning that they cannot die. So, which might be true. But I think that here for this player, they know exactly the opposite. And I remember a fun fact. It was last year. The CEO of BNP, which is a huge French, European and worldwide bank, was saying that BNP has been active on the market for 250 years and will be active for, again, 250 years. And the same day, Jeff Bezos, the CEO of Amazon, was saying that maybe in 25 years from now, Amazon will not be there anymore. So I think it's very interesting in terms of mindset. Again, banks and insurance companies believe that they will be live for forever, whereas tech companies that have grown very fast know that first they can be disrupted, they can disappear, and or a very small player today can compete with them in a few years and grow very fast as well. So I think it's a different mindset, which might explain why these players are acquiring a lot of technology, whereas insurance company, banks are, let's say, slowly embracing this tech investment.
Interesting. I mean, this is a beautiful quote you actually highlighted, that I often say when I present or when I'm asked, my view is, we can pretend to have a crystal ball. I mean, we do a lot of scenario planning and we are fortunate to have the time to do that. However, when you look at the 1955 Fortune 500, 95% of the companies which were on this Fortune 500 are gone, acquired, disappeared. And so the pretension of being, there forever is potentially a fallacy. Now we know a lot of sectors we are talking about, and the sector we cherish is protected by regulation, and it's great. But imagine if that was not the case, and so that's why you would hear a Jeff Bezos or a Google executive or any tech executive say, you know what, we've grown and we've built a great business, but who knows, maybe it will be acquired by Tencent. It might be acquired by Alibaba. It might actually be acquired by a bank. Who God knows, pay for it. Yeah. And then you will consider it, right?
Yeah, that might be an explanation. And I think as well that in terms of investment, this player know that it could add a lot. I think it's as well when they have invested or when they have acquired a company, it's easiest for this kind of tech players that are very modern, let's say, in IT system, to embrace or to adapt the technology that they have bought out Whereas I think in the insurance and financial services more generally, it's a bit more difficult to plug new technology on top of the existing layer, which is a challenge. And by the way, this kind of M&A trend that you mentioned in the US already apply in insurance, because if you have a look at very big players, a few of them are just a merger of smaller brands.
Absolutely.
So you can say they are still on the ground, but the truth is that brands that were live in insurance a few years ago are not anymore. So it's a kind of, let's say, bankruptcy or disappearance or something like that. But these M&A trends are, if you take, for instance, the health insurance in France, it applied a lot. The biggest player are merger of very small or medium-sized player, which become very huge by combining together.
So one thing you're actually over highlighting is that, when you look at hundreds of billion-size businesses, which would be an Alliance or Unicre, right, which would be an 100 billion, for them to grow 5%, they need to make 5 billion. And if they can't do that from underwriting premium, they need to make this from M&A. Mm-hmm. And so if you actually start understanding the economics as to how to grow a business, M&A becomes crucial, right? It's not something you cannot even consider as part of your DNA as an insurance company, because this is key to grow and to pay potential claims in the future.
Yeah, real challenge. So that's, and by the way, and again, this M&A trends, you can see it in a positive way, seeing, as you mentioned, a way to grow. But on the other side, if you'd like to be a bit, let's say, challenging, you can say it's brand that disappear. So again, back to the this feeling that corporates will be there anyway and forever. I think that we have very recent example that it's not true, and that a few brands have disappeared, even in insurance. Obviously, the players are still there, but not under the same brand.
Absolutely. So time for your takeaways, right, Florian? Yeah. And so just to guide the thinking about your takeaways, I just want you to start with technology, and then I want you to go into capabilities. First, from a technology viewpoint, what I've seen is that when you look at the startups and what they are trying to combine together, they're actually putting a lot of things together. Big data, IoT, cloud, mobile, AI, blockchain, and the last one will be my 5G. So the one with 7 you can't see is 5G, right? 5G is coming into market. The other key point, I think, which is very important, and now you hear about all these digital twins as well, amongst others. And then the second point I want you to highlight is capability. So to combine those technology together, you need to look at personalization. You hear a lot about customization, hyper-personalization, tailoring of products and services, circular economy, which is today about reusing your asset, right? You can't just throw away. You need to think about what you do with your laptop and whether you're actually going to give back your laptop to Apple or whatever. Asset sharing, which I think is going to be a big thing in our industry, where would you own fleets, as an example, as a very basic scenario, when you look even at claims and how some organizations are built around their claims processing, owning cars and fleets when potentially they don't need to. Usage space, all our on-demand techniques and all the things around making sure you don't have to pay upfront for everything. You just pay when you need, which leads therefore to collaborative ecosystem. As you know, you and I are big around platforms and ecosystem economy. And to build those, you need an agile thinking. So what does it mean for you and the future and the conclusion we can bring to this little discussion?
Yeah, that's very interesting, and I definitely agree that this is a very relevant split, let's say, or complementary split to have technology on one side. I mean, because this is the basis of our investment on our side, and I think it's the basis as well of the next insurance generation. It will be around technology, but again, technology is just a mean to address a very either customer needs or emerging needs, or as you mentioned, transformational behaviors in the society. So I think that it makes a lot of sense. And I would just pick two examples that I think are key for the next year, at least, and maybe years, I hope. The first one, in terms of pure technology, is API. I think it's key. So obviously, API are not new, but with the embedded insurance and seeing more and more non-insurance player entering the insurance industry and becoming distributor of insurance, I think that we will see more and more platforms wanting to distribute insurance. So, and by the way, we have made an investment in that space in Spain. It's the tech enabler that basically enable any platform to have insurance distributed in the sales process. What we see from them is that the traction, the demand is not coming from insurance. It's coming from the platform themselves. More and more platforms are coming to them saying, okay, we want to have insurance somewhere in our sales cycle and in our sales journey. So could you help? So I think that it will accelerate the need on the insurance side to be API based and to be API enabled, because basically the truth in that behavior is that first platform want to have this insurance product, then they go to this company, the name is WeCover, and then WeCover is just asking the market, okay, I need to have this product, I designed this product, who would like to carry the risk? So basically, the insurance company that are not able to be plugged to this company are out of the game. So that's the challenge, especially again when the demand comes from the market itself. So I think that it's the first trend, and the second trend is around data. So you mentioned data, and I think it applies a lot here in competencies and capabilities. And I think that the major challenge, or at least the one that I'm the most excited about, is how to leverage external data, either in new risks, cybersecurity, weather insurance, new works, pandemic, obviously, and so on. So you have plenty of examples here. But more generally and more specifically, I would say how to leverage this data in underwriting, because there is as well a challenge, I think, in even in commoditized products where non-insurance companies could enter again the space. They have data. Obviously, that's not insurance data. They don't have claim data, but they have other data that might be helpful to underwrite insurance policies. So I think that this kind of technology, this kind of capabilities to leverage external data, to leverage new data set, or to access data set will be key in the near future. So I expect more and more startups into that space, new risks and data in underwriting.
And, it's an amazing way of concluding, because when you actually look at the world we are entering today, it's an emerging real risk world where we need to always think about the future. We do not yet know some of the new risks which are going to come to us. We've covered, a lot around why InsurTechs are coming to market, to often be able to focus on 100 or 10 million market before it becoming a billion-size market, right? So serving the underserved segments, being able to try technology and experiment in ways that big companies may not be able to, and then allowing the market to mature in technology so that then we can start looking at partnership with the incumbent players. So very wise words. Emerging risk, I think, for me, is going to be a big tenet of what is going to be part of our tomorrow. We've learned about it this year, that all of us need to be operationally resilient.
Yeah.
Any last words you want to share?
I think that what you mentioned in your previous sentence is very interesting. Small market becoming a huge market. I think that this is key, even for corporates, to have this in mind. We are working, every time we are working in technology, the curve that applies is the exponential curve, which is very low and then it's surging. And I think that we need all in that market to have this in mind. And especially in the startup area, it always works like that. Obviously, it might never surge, but when it surges, then this has a dramatic impact. So I think that corporate and startup need to better understand that we are still in the very beginning of the InsurTech scene. Again, $7 or $8 billion invested in InsurTech worldwide, as mentioned in your first slide. It's still very small. If you compare, for instance, with Fintech last year, $45 billion invested worldwide. So you see the ratio between Fintech investment and InsurTech investment is huge. The gap is huge. But again, the curve is growing. So it's not because startups are still small right now and maybe they are not yet competing directly with incumbents, that it will not happen very soon. So let's keep working into that direction. Let's keep solving real pain points with technology, and let's keep building the next insurance generation.
Florian, thank you so much for your time. I'm super grateful for you spending, I was thinking 30 minutes, but all this has been so amazing. We probably have 45 minutes of amazing content for our audience. And so I just want to leave everyone with thanking Florian, providing your LinkedIn and Twitter links, which is very important to get in touch with you. And thank you ever so much for such a rich set of insights. Until next time.
Thanks a lot for the invitation and for the discussion. And again, looking forward to making things happen in 2021.
Perfect. Thank you, Florian.
Thanks a lot.
Everybody for listening.